Hey, everybody, you've probably noticed that a lot of software stocks have been under pressure lately. There's widespread fear that essentially AI is going to disrupt the software industry, that companies and individuals are going to be able to just kind of code what they need through AI and bypass software companies entirely. Um, Needless to say, I don't buy it completely. Not in all cases. There are some software companies that absolutely should be scared of AI headwinds, but there are some that are not. I'm going to talk about one of my favorites, Unity software, that I think is just unfairly beaten down and is a great opportunity right now. We're going to talk all about it. Before we do, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now for free from the Motley Fool. It is the best way to support this work I'm doing here on YouTube. Again, fool.com/Frankel. And I'll put that link in the description as well. So let's dive right in. All right, so here's what's going on, and I'll put the chart up in just a second. But earlier in January, so January 30th, Google launched Project Genie. It's an interactive tool for creating 3D environments with AI, and it does a lot of what what Unity does. So the stock fell in response to that. That was its worst single-day drop in years. It wasn't just Unity. Roblox got crushed. Apple 11 got crushed. They do kind of similar things as well. And just a little while after that, the company reported its Q4 earnings, and that triggered a second leg of the sell-off. Um, an even worse day than the one before. And in all, the company did beat on revenue and profits. The guidance was a little bit cautious for Q1, and in all, you can see right here. So here's the initial leg down, and here's the second leg down. So there's a lot to be cautious about right now with the stock. So it's down 55% so far this year. That's a pretty big move. So here's what Google's Project Genie actually is and what it isn't. So Unity CEO, they said that Project Genie will not replace game engines, but are going to serve as inspiration for creators. There's severe limitations in resolution, frame rates, and input lag. So Genie, it generates environments from prompts, but it doesn't deploy, optimize, monetize, or distribute games across the platforms. That's what Unity does. They do all four of those. So here's just what one analyst said. He said these concerns are fundamentally misplaced, and I agree. I think that Unity is very embedded in what it does for its customers, and I don't think that some AI coding tools are going to change that. So if you're not familiar with what Unity's business does today, there's two segments to it. There's create and grow. Create is what content creators use to create games and things like that, and other things. It's not just for video games. And grow is to essentially monetize the platform, or to monetize what is being created. That's where the ad platforms and things like that are. So they get paid based on video game creation. Of course, they want their developers to succeed, but it is definitely a picks and shovels model on the gaming industry. And as a whole, the gaming industry is doing well. So it gets paid whether, regardless of who the big success stories are, because a lot of mobile games are created with Unity's platform. They launched the Unity Studio. That's a new AI-powered suite of tools. The AI threat is, in my mind, actually more of a potential tailwind than a headwind. So games, especially more games generated with AI, means more games running on Unity. That means more ad inventory for the Vector platform, more opportunity throughout Unity's business. It's more benefit than risk is kind of my long-term outlook here. So looking at some of these numbers, the Vector ad platform, which is a relatively new and probably the fastest growing part of Unity's business, in January 2026, revenue grew 72% year over year. That was its best month ever. Really significant because that came after the holiday season, so it didn't even see a big drop off. The company has over $2 billion in cash, so tremendous financial flexibility to invest as needed. And the company is generating a ton of free cash flow. That was a 5-year high it hit in 2025. And yes, guidance was a little bit weak, but management is targeting $1 billion of annual revenue by the end of this year and 300 basis points of margin expansion in the first quarter. So it is still kind of a speculative position, especially with all the competitive headwinds and threats going on right now. They did miss their guidance. That was a real thing. There is a lot of execution risk here, But I think the risk reward dynamics of Unity really make a whole lot of sense here, and it's worth a closer look at these levels. So again, there are risks here. Guidance was below expectations. The turnaround right now, Unity is definitely a business that turnaround. It went from losing revenue and losing money to where it's growing slightly, but in the create segment, I mentioned the grow segment. That's where the ad tools and things like that are. The create segment, we're not seeing the turnaround really fully confirmed yet. There's a lot of competition in the space, so there are some big risks to know. But like I said, I think the risk reward makes a lot of sense here. Here's my bull case in one sentence: the market is pricing Unity as if it's a dying game engine, while ignoring that the ad generation platform, it just had its best month ever. So it's still a speculative position. It's still very much a growth investment. It's in turnaround. I wouldn't buy it if I was a conservative investor, but if you have a higher risk tolerance, it's one that could definitely be worth a look for you. So that's kind of my case on Unity in a nutshell. It's one of my favorite software stocks. I definitely want some more software exposure in my portfolio, especially because there's so many bargains right now. If Unity is not the one for you, let me know in the comments what you think is a great software stock to buy now. I read every single one of them individually. And thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 983% as of December 30th, 2025, and are measured against the S&P 500 returns of 195% as of December 30th, 2025.